Hey everyone, welcome back to Corporate Decoder. Today, AeroVironment Incorporated AVAV just filed an amendment to their quarterly report, and I'm seeing a major accounting red flag that matters. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company is actually restating some of their previously released financial numbers due to an accounting error found in their goodwill calculations. This is basically an update to their previous report for the quarter ending the 31st of January 2026. They are filing this amended report because they found a mistake in how they calculated the value of something called goodwill, specifically for their space division. So what does this error mean for the company's finances? Well, it means that some of the numbers they reported earlier were not quite right. For the 3 and 9 month periods ending the 31st of January 2026, their loss from operations was actually understated by a significant amount, close to $89 million. And their net loss was understated by about $87 million for the same periods. This means their actual losses were bigger than what they initially reported. Looking at their balance sheet as of the 31st of January 2026, and restated of course, we see the impact. Their goodwill, which is basically the extra value of a company's assets beyond their individually identified ones, was stated as over $2.4 billion previously. But after the restatement, it is now just over $2.3 billion. The roughly $89 million difference comes from this accounting mistake. This also means their total assets were overstated by almost $90 million. And on the other side of the equation, their retained earnings, which is the accumulated profit or loss of the company, also sees a change. It was previously reported as a positive $33 million showing a profit. But after the restatement, it is now a deficit of almost $54 million indicating a loss. This is tied directly to that net loss understatement we saw earlier. Now let's dive into their operations and see what is really going on with their income statement. One of the biggest changes is this goodwill impairment. For the 3 months ending the 31st of January 2026, they previously reported an impairment of goodwill of around $151 million. But with the restatement, this number jumped to over $240 million. This significant jump is directly related to the accounting error they are correcting. Because of this goodwill impairment and the accounting correction, their loss from operations for that quarter went from about $179 million to almost $268 million. That is a huge jump in losses for a single quarter. Looking at the balance sheet as of the 31st of January 2026, we can see their current assets are around $1.7 billion, which is a big jump from $606 million in April 2025. A large part of that is cash and short-term investments. They have nearly $290 million in cash and almost $300 million in short-term investments, which is a significant increase compared to April 2025. Now let's talk about their debt. As of the 31st of January 2026, they have about $728 million in long-term debt. This is a massive increase from just $30,000 at the 30th of April 2025. This big jump in debt is largely due to their financing activities. In July 2025, they raised about $968 million by issuing shares and another $727 million by issuing convertible notes. That's a lot of money coming in, but it also means a lot of future obligations. They used a good chunk of this money to pay off other debts. Let's look at how much money they are bringing in. For the 3 months ending the 31st of January 2026, their total revenue was about $408 million. Product sales made up the larger portion of that at nearly $278 million, with contract services bringing in about $130 million. Despite that revenue, their operations actually lost money. They had a loss from operations of nearly $268 million for this quarter. They did have some interest income though, around $3.7 million, which helped a little. For the 9-month period ending the 31st of January 2026, their loss from operations was even higher at nearly $368 million. A big reason for these losses is the goodwill impairment we discussed earlier, which was a massive $241 million for the 9-month period. Now let's look at their different business segments. Their autonomous systems segment brought in about $279 million in revenue for the quarter, while their space, cyber, and directed energy segment, which is newer, brought in around $129 million. This space, cyber, and directed energy segment is largely from their recent acquisition of Blue Halo. Looking ahead, they have a funded backlog, meaning money they are contracted to receive for work already committed, of over $1.1 billion. That is a pretty solid number that suggests future revenue. In terms of liquidity, they have about $339 million available under their revolving credit facility. This is good to know they have access to more funds if needed. Now, let's talk about those internal control issues. they've identified a material weakness. This is a serious problem that means there is a real chance that mistakes in their financial reporting won't be caught in time. This specific issue is with how they prepare and review their goodwill impairment analysis. It sounds like they weren't properly reconciling goodwill across their different business units. Another significant risk factor they highlight is their compliance with US Department of Defense cybersecurity requirements like CMC. Failing to meet these can have serious consequences, potentially including losing government contracts, facing penalties, or even being banned from government work. This is a really important area for defense contractors. This ties into a recent development. In January 2026, they received a stop work order on a contract for their Badger antenna systems. This directly led to that large goodwill impairment charge we saw, because it significantly impacted their revenue expectations for the space reporting unit. They are planning to continue developing this product commercially though. A major strategic move was their acquisition of BlueHalo on May 1, 2025 for a huge $3.48 billion. This acquisition significantly expanded their operations and revenue, especially bringing in the space, cyber, and directed energy segment. However, it also brought in its own set of challenges, including BlueHalo having 3 material weaknesses in its internal controls before the acquisition. AeroVironment is working on integrating these and improving their overall control environment. So, what is my take on all of this? The company has made some big strategic moves, like acquiring BlueHalo and raising a lot of capital through stock and convertible notes. This has dramatically changed their financial picture, with much higher revenues and assets, but also significantly higher debt and a large goodwill impairment that shows operational challenges in their space division. The material weakness in their financial reporting is a concern, and it is something investors will be watching closely, especially alongside their cybersecurity compliance. The risk of not being able to meet their debt obligations is real, given the size of their recent borrowings and convertible notes, and the fact that their operations are currently losing money. When companies take on this much debt, especially after a major acquisition and with ongoing operational losses, it always raises questions about their long-term financial health. The goodwill impairment itself highlights that their valuation of the space division may have been too optimistic, and the stop work order underscores the volatile nature of government contracts. What I am actually looking for is how effectively they integrate BlueHalo, address these internal control weaknesses, and navigate the cybersecurity compliance landscape. The future direction of their revenue growth and their ability to manage that substantial debt load are key. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description.